Mr. Vikas Bansal.
A very good afternoon to everyone. I am Shashank Sharma, and on behalf of Scorny Solutions Private Limited, I would like to welcome you all to this webinar on unlocking the new underwriting and onboarding models for the digital India. And thank you so much to all the panelists and guests who are joining us online from various channels. And I think the topic needs no introduction also, but still we'll try to deliberate a bit on where are we coming here from. Before we start and get into the nitty-gritties of the topic, quick round of introduction to our panelists here. So we have with us Mr. Sharad Agarwal, who is the CEO and CTO with Ugro Capital. Mr. Sharad has spent, more than 2 decades in the industry now, and he has served various organizations from the likes of Citi to Religare to Fintry and now to Ugro. Thank you, sir, for sparing your time and coming on board with us here. We have Mr. Manoj Sahu, who is been a veteran banker. He's been with UCO Bank for a considerable time now, and he has seen ups and downs for different types of digitization activities which are being taken up at UCO Bank. Thank you, sir. Thank you for sparing the time. We have Mr. Anshu Sahai. He is, the head card and retail applications with Bandhan Bank. Again, he would be, I would say instrumental in adding his perspective from a multi-organization, view which he has for over 2 decades. And he has served with almost, all the major private sector banks in the country. And I think your inputs will be much valuable from that note, Anshu. Thank you for sparing the time. We also have Mr. Vikas Bansal. He's a co-founder with Arkbridge Capital, which is a new age NBFC set up recently. And before that, Mr. Bansal had been, spending his stint with Tata Capital and other organizations. Thank you, Vikasji, for sparing the time today. So, for the audience, to quickly take it up, I think when it comes to India's digital lending ecosystem, we all would agree that it's growing at an exponential pace. And I think the combination of a tech-savvy population and an increasing internet penetration has, by default, led to a significant, a traditional shift from digital, credit models now moving into the tier 2 and tier 3 visibility areas also. While this transformation, was visible in tier 1 in the recent years, nowadays we are actually seeing a lot of penetration in tier 2 and tier 3 cities as well. And I think we were just, gathering some stats here, and according to a recent, publication, while we, already are standing at a digital lending platform market, which is projected to grow at, I would say more than $2.5 billion by 2030, and currently being growing at a CAGR of more than 30% between, 25 to 30 is what is the expectations. So we can, definitely proudly say that as a country, we have been able to establish ourselves as one of the quick adopters of technology when it comes to credit. And even if you look at the recent data, which is being published by different organizations, I was able to gather data from FACE as a member of that organization that, roughly around, we're sitting at over almost 3 crore loans being, dispersed digitally. And where the average ticket size of the loan is ranging between, anywhere between 25,000 to 50,000 to start with. The question is, where do we go from here? And, we are sitting at a context sitting here, but I think the future of digital lending in India will by default have to be shaped on some major forces. And I think a wider adoption is, one of a key, I would say, contributor to digital penetration being, a widespread mechanism in the country overall as a whole. Use of emergent technologies, definitely, because we see a lot of, push from the government as well as from all the regulators, and in fact, from all the lenders, who are there in the call with us also, that emerging use of technologies is by default helping a lot. And I think there's a mindset change. Now the focus is upon customer first platforms. So, when we look at new onboarding and underwriting models, we need to look at the major forces on adoption, emerging technologies, customer first platforms, slightly moving ahead from the orthodox way of underwriting, moving to a new way of credit underwriting. And all that has been, basically being possible due to certain digitization efforts, which in the recent times, I think the audience and the speakers must have been talked about. We're listening about frameworks like account aggregator, API Setu, RBIH taking specific steps on introducing the unified lending platforms. So, there's a lot of push on all aspects from that note. So I definitely think that conducting this webinar on the said topic is, going to solve, I would say, a lot of unanswered questions from different, I would say, panelists. So just to start, Sharaji, we'll start with you, sir.
Okay.
That, I would say that you can probably give an introduction on use of technology at UGRO. And a first question which I would like to put up is that in your view, how do you think that, inclusion of data aggregation and analytics have changed the overall lending ecosystem for UGRO as an entity, sir?
Okay. Thank you, Shashank. Okay, so I'll talk about Ugro IT. So we totally depended on Ugro, a lot of technologies. We have multi products of secured, unsecured, digital business, emerging market business, which is a micro kind of lab. And so there is extensive use of technology in all products line in Ugro. So we have our own growth score, proprietary score, which is a combination of bureau plus banking plus GST. Okay. We have got IPR on that, by the way, few months back.
That's
Okay.
very good.
Uh, 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 and the question you asked me, definitely we use account aggregators as a tool, uh, and we are seeing now a lot of adoption. Okay, usage of that. Just let me give you some data point. Okay, Samati, who manages account aggregators. So we see aggregate data from that company, and from our perspective, we have increased usage to 20 to 30% of our portfolio, provided we have emerging market business, which is 70% business into tier 3, tier 4 cities, which is very difficult to get account aggregator usage, right? As such, for that particular customer segment,
Correct.
still we have reached to 25-30%, and out of that 60% is output is used, is a through, I would say, is a positive throughput. Okay, where we have seen that, so there is a lot of adoption happening. It is increasing our underwriting approval process, reducing paperwork. Okay, and one more thing which I have found is a very good use case of this account aggregators in collection, which I was not aware, right?
Right.
Okay, so there we are using Bigway. Okay, we can come to know all accounts, we can come to know balances, and of course, it is based on customer consent. Okay, so that way I see a lot of efforts are being done by Samiti also. They're talking to all companies and driving usage. Even customers are now tech savvy. They're becoming tech savvy in an assisted model also, in a self usage model also. Okay, so I'm a big fan of adopting these technologies, and I'm
Perfect.
sure we'll use that. Yeah.
Certainly. And sir, just a quick follow-up since you mentioned on account aggregator and you also mentioned your IP which you received on the growth score.
Yeah.
I think, some thoughts on how have you been seeing the penetration of, the linkages between setting up between the bank statements and the GST data, which is now being widely adopted for. And I think UGRO has been setting the standards on using these data aggregation services. So apart from the account statements, do you think that, GST data has become, another critical footprint in terms of capturing any MSMEs, underwriting information there?
Yeah, very much. And in our case, there is a certain ticket size where we have put GST as a mandatory. Okay, but not for 2 lakh rupees loan or 5 lakh rupees loans. Okay, so there's a certain ticket size where we are asking GST, and it's an important data point. So we normally take last 2 financial year GST data, which is injected into our growth score model. And there's a growth score which generates 1, 2, 3, 4, 5, right? And we have a policy norm that by certain threshold there is no go. Okay,
Correct.
that kind of data we get from GST, banking, and of course bureau. Bureau everyone uses, right? And
Correct.
we put a lot of behavioral data also, customers' behavioral data, stock data, all that. Okay, basis our market need. So GST plays an important role, and it is mandatory after certain kind of loan amount.
No, definitely, sir. I think account aggregator a first approach and use of GST, and you rightly mentioned that setting up of certain go no go parameters. I think that can truly transform the way customers are being onboarded and underwritten today. So I'll come back to you with the follow up question on that, sir. Well, moving the discussion further, I will now like to hear a public sector banking's perspective on how things have been moving there. So Manoj sir, over to you, sir. And I think just a quick question which I can put up is that sir, what are the key initiatives which you think that public sector banks or especially UCO as a bank have been adopting to basically increase the penetration on digital footprints and data aggregation being used for the basis of underwriting in the banks.
So, good afternoon to all of you. Thank you, Sasank, for putting a nice question on me. So, good afternoon to all panelists. I think all of you know that being a public sector bank, the first challenge which we are facing is we are struggling with the legacy data. If the type of customer, if you will see, then we have penetration in all areas like rural, semi-urban, urban, and metro. So, like these digital initiatives, which all the banks, along with mostly public sector banks, have already started this, and since last 2 to 3 years, means we are doing. Government is also pushing specifically for MSME segment customers on digital footprints. So
Right.
the normally the public sector banks, what initiatives they are taking is, means basically we cannot target all of our customer for this digital footprint, right? So we
Right.
have we have that challenge, but using this data analytics tools, means normally we analyze the customer data, we analyze the vast of data which we are having, we analyze it, we get a particular segmentation of the customer, and accordingly we are trying to push our products over digital. So bank is taking lot of steps, means we are onboarding the fintechs, we have onboarded these digital lending platforms, and thanks to the government's push for this account aggregator, then the other digital footprint products which government is bringing, as well as the sector is moving towards, and with right partnership with the right fintech. So these steps, account aggregator, fintech partnership, then implementation of this automation technologies, AI, ML, everything, means the banks are now going ahead in all the technologies to increase
Correct.
this digital footprint, and to trying to means go from the manual lending to the digital lending footprint.
Correct, sir. I think, sir, you very rightly, pointed out two very key statements in your, I would say deliberation, which was, one that public sector banks are sitting at a lot of legacy data, which needs a strong push, and I would say from that to from technology front to get updated in the system. And second is, the partnership model between a public sector banks and fintechs. We'll, definitely come up with, a follow-up question on that for you, sir. But taking the discussion further, I think so. I'll move to Mr. Anshu. So Anshu, I think just a quick, I would say, round of introduction, but definitely being followed up. So I have merged two questions for you in a single question because I wanted to hear your perspective from a bank which has been primarily, I would say, focusing upon the MFI space and now trying to create a much wider and a diversified portfolio that how do you think that journey on adopting data aggregation services in the bank has been so far? And also, what are the major products, integrated to automate the customer onboarding and underwriting till now? I think we'll love to hear your perspective on that, Arjun.
Sure. Thanks, Shashank. Thanks for giving me this opportunity. So, see, I'll not just stick to what our bank has been doing in terms of transforming or walking this path of transformation. See, I'll still remember approximately 20 years back, we didn't have any data which used to reside outside and we could pull it. I still remember in HDFC Bank, when we started working with HDFC Bank, CIBIL had just started, and that too, it had a lot of challenge in asking banks to share data.
Right.
So I've seen those days where you had no data, and now is the day when you have what, some 3 billion bank accounts. You have all kinds of information available with some other agency or some of the other database, whether it is a GST, whether it is a MSME data, customer data, all kinds of information is already available. So, and this journey actually was not that easy. So it was a transformational journey which had a lot of challenges. Now coming to the journey from our bank. So see, for Bandhan Bank, we have always been adopting all these tech interventions, including all kinds of data aggregation. So right from, say, a credit underwriting basis, automated CAM generation, to say GST analysis, to all kinds of analysis, we have always been doing this. See, from a product perspective, we have been doing this across the personal loans, some of our asset-based products, and MSME loans. So all this data aggregation services we have been using across various of these products. One of an important aspect that we are currently looking at is, if to a credit underwriter we can provide him as much as information which can the credit decisioning can actually be made simpler. So we are working on lots of these techniques.
Fair enough. So, rightly mentioning that how this slowly transformation of setting up the entire digital, footprint and making the audience adopt, and then adopting certain credit underwriting models which can help you to basically move ahead from small ticket size to even automated, lending on the higher ticket size proposals also. We'll definitely love to, hear more from you in the follow-up questions on these aspects. And I think I'll just shift the focus to our fourth panelist for the day, Mr. Vikas. So I think, Vikasji, from where, I would like to understand is that we've talked about data aggregation and use in, a public sector bank, a private sector bank, Ugro, which is, from day one, adopting all these functionalities. And I think overall for the market, we have been able to establish till now that definitely there is a lot of penetration on the digitization front basis, account aggregator basis, the GST data, or I would say, other alternate data points which today are available. Taking the discussion from there, I'd just like to understand that how do you think that data aggregation has reached to the subprime customers today? And, how is your institution, which is targeting on small ticket size loans, trying to solve this entire problem statement when it comes to onboarding of these customers?
So, thanks, Ishan, first of all, for having me here on this discussion. So, first is, these are not the subprime customers. I call them, informal and underserved, basically. So now, if you look at the, evolvement of the technology and digitization in last, especially 4 years post-COVID, a lot of alternate data points are available for this segment as well, especially on the spending side and purchase side. So normally on the corporate side, when we talk about the formal segment, it's a top-down approach. But here for this segment, you have to take a reverse approach in terms of their purchases, their spending habits, e-commerce. Now with the growth of UPI and penetration of UPI transactions, you tend to develop lot more alternative data points from the bank statement. So as Sharathji rightly mentioned, that account aggregator framework, Sehmati, almost 3 years back, the success ratio was in single digit. But in last 3 years, there were challenges, there was restraint from the banks, and all. But now currently, as Sharajji mentioned, 25% is the success ratio. For this segment, even if success ratio is 25% through account aggregator, in last 2 years, it has crossed. So I think that provides a very good data points wherein you can develop other data points through bureau, through e-commerce, and you need to marry all these alternate data points and create a framework for this segment. Going forward, definitely it will evolve. Technology is evolving. These unstructured data points, people are working, we are also working to make it in a structured data points which can be used in future for data analytics.
Fair enough. I think very nicely articulated on that front, Vigasi. And you've also picked up and, introduced the last concept, which we were talking about is, on the use of alternate data spaces for the informal sector of credit. And we'll definitely like to, understand, because now that the first phase of the Q&A is done, we will definitely like to deep dive into, how you've been operating on these models in the follow-up questions there. Well, I'll come back to Sharadji, with the second question on you, sir, that we've talked about a lot on the use of technology at Ugro and adoption of, account aggregators. And sir, I would just like to understand from a reverse perspective that where do you think is the, most common friction point which you have observed when it comes to digital lending ecosystem for onboarding MSMEs? And Sharad sir, also I would like to understand your viewpoint on new to credit customers. And what steps do you think that financial institutions can take to reduce this friction when it comes to, the segment of the data which is still not being able to adopt to these digital roles?
So first of all, I would say, little bit on a business aspect, right? The most, common friction point comes in the marrying the policies. Okay, so what fintech company wants to do that, which kind of customer segment they want to tap, right? Okay, and then lenders' ability to take that risk and they, drive the policies, credit policy around that, right? That is the main friction point. Whether lender is ready to do cash flow statement basis underwriting, some automated database underwriting. Okay, so one thing is marrying these two programs, right? Mindset is the main friction point I see, and where both needs to work together, okay, and understand market dynamics, which market we are tapping, right? Okay, I think a lot of work has done in this line, and from Ugro perspective, we have a 70 partners, right? So we are more adaptive to these kind of stuff. Okay. Second piece I would say the major is tech integration, right? What I have seen, fintechs are not ready for tech integration. Frankly speaking, there are few fintech partners, they are tech savvy, they rely on technology. But you see now, the RBI has come back with a lot of constraint. You have to use lenders code on bureau policies, even bank statement, agreements, stamp duties, right? Whatever documentation you have to do on behalf of lender, consent you have to take on behalf of lender. What I'm saying, fintech company, they need to put investment on technology as well. Even I'm saying big companies, right? They just want to start with onboarding, कि मैं customer लिया है, and then they want to start, right? But in Ugro, we have a complete API-based model. Even we have some manual model which facilitates complete digital process, right? What I'm saying, a lot of efforts are going on this line, and people have realized now कि ये तो करना पड़ेगा. Otherwise, you will not have any choice, right? मतलब you have to sign a e-agreement, stamp paper you have to take on behalf of company. They will have to manage that. Okay, and that's where another beauty comes, turnaround times, right? So fintech needs turnaround time, so you can increase turnaround time or approval ratio once you integrate technology. In a manual process, this will never happen. Okay, so I see these 2-3 major friction points, right? And of course, other one is on a reconciliation process, right? Of data matching, what is cost, right? All that. Again, there's a lot of technology has come up where you can do automation of reconciliation. Okay, that really helps. else a lot of team members are spending a lot of time on reconciliation. Okay. So these 3-4 points, if lenders and fintech companies are ready to work on, I think we have a good model to create on that.
Perfect, sir. Perfect. And sir, just a quick take on NTC borrowers. Anything on that front?
Yeah,
And
anything I mentioned, right? New to credit customer lenders' ability to take that risk is important, right? And we have seen in tier 3, tier 4, a lot of customers are NTC customers, good customers, right? You can have a certain ticket size, okay, offer up to 3 lakhs, 4 lakhs, 5 lakhs kind of loan okay, uh, especially in embedded finance. In we have embedded finance also in Ugro. Okay, that's we have integrated with a lot of tech companies, PhonePe of the world, BharatPe, right? So we tap new NTC customers basis their transaction behavior, usage, UPI transaction behavior, all that, and it's giving us good results. So,
perfect, sir.
yeah.
So I think, as you rightly mentioned, so tech integration being one of the friction points there, and reconciliation being another one, and marriage between the credit policy and the technology which is being adopted for. I would say food for thought you have added for the next panelist there, sir. And I'll move on to Mr. Manoj again. So Manoj sir, as Sharadji was mentioning around, that the friction points today would exist around tech integrations, or I would say marriage between the credit policies and technologies. I'll also like to link this to the question where, we left your first answer, that how do you think that, financial institutions are acting in terms of their partnership roles between banks and I would say fintech and analytic firms in building more sustainable credit models, which can, take care of certain tech integration part. Maybe it can be introduction of middleware and gateway systems in the bank for standardization of policy setting up, or it can be for, I would say, setting up of a more configurable platform, sir. But for all of these, I do agree that, a partnership model should be explored there. But sir, would love to hear your thoughts that how do you think financial institutions and analytics firms partnership can basically, help to support this model as a whole, sir?
Yes, Sasank, actually, the thing is, this financial institution, they are very means experienced and very clear on their own policies and to whom they wanted to lend. But in technology, they are not very expertise in the technology, right? So that's why this partnership of fintech as well as the financial institution is very much necessary in the industry as of now. As rightly told by Saradji that yes, many fintechs are there, means banks are also onboarding lot of fintechs, but yes, all fintechs are not fully capable enough. But since the means RBI is coming up with the fintech regulation rules and other things, so means some of the fintechs, they have filtered themselves and they are coming forward for the partnership. While doing the partnership with these fintechs, I think we have to see both the this means credit models, like internal credit model as well as the external credit model. Internal credit model, I will say that what is the credit internal rating and internal models banks are fixing by themselves, and what are the external models, what is the RBI, what are the rules they are coming up with us, and based on that what the industry is going, and accordingly we have to set it out. I think everybody is knowing that to standardize these platforms, these integrations, I think RBI has currently come up with the ULI concept, wherein I think this fintechs as well as the banks, including they have also allowed other financial institutions to means wherein they both can onboard themselves and they can use their platforms each other. They can do the API integration to standardize a particular platform wherein everybody can do safe. As a public sector bank, we are more comfortable to go towards ULI because that is a standardized platform and nobody is going to ask us anything if something is going to happen, or what the fintechs are doing partnerships. So taking into this using of the these models rating models towards the credit. I think it is a very important criteria for all the financial institutions, because going ahead with only digital lending or digital transformation will not give much result unless and until you are doing in a straightforward way, you are doing in a secured way. And because to take lending, there are many customers are there, but unless and until you have a right model, right choose of customers and a standardized platform to do that, it is very difficult for the financial institution to sustain. So this partnership is very much needed, and it has to be done in a regulated way.
Very right, sir. I think you've nicely put it up with the, making the users understand that, banks have been the, I would say, core bearers of the functional knowledge around the domain in the lending. And also with regards to, inclusion of fintech partnerships can definitely help to marry this financial understanding and the technology usage there. Very rightly put up, Manoj sir. I'll come back with the follow-up questions further. But I think Anshu, coming again to your side, we've talked about certain friction points and rightly mentioned that introduction of ULI and having tech integration capabilities can definitely help to, I would say, streamline a few of these integration efforts. Now, when it comes to, I would say handling a multi-product portfolio, in a bank, because I also understand that with the private sector banks, it's a single product, but multiple programs running under the same product there. And, products with public sector banks, or I would say tech-based NBFCs can be more templatized in nature. Now, while we compare these templatized products to that of, orthodox standardized products with multiple swim lanes working in the same product, what's your opinion that, how these friction points can be handled? And what do you think, is holding back the financial institutions on fully trusting these models, which can help us to either have a greater penetration, or why is that still certain parts of these entire products are being pushed for green channels and rest are still in terms of, I would say manual tray or any assisted kind of a tray there?
Shashank, it's not that automated underwriting or machine-based, AI-based underwriting is not happening. In fact, it's on a huge uptrend, and the curve is too steep. But as they say, see, technology is to assist a human. It's not that technology will replace a human. See, there are risks associated with automation, and especially with a financial institution, a bank, which handles people's money. So it is good to have automation. It is good to induce as much automation as possible. But from an underwriting perspective, when you are providing a loan to a customer, it is very important that you evaluate all aspects. See, if you see the historic data, see most of the big banks also. See, you would have for a asset-based product, automated underwriting to a certain extent is okay. But for a personal loan or a credit card, it becomes very risky. There are various reasons for this. See, data quality is something that is a major issue. Issues with documents, statements, the transaction data, the OCRs that is being done, the data being stored externally. So this aggregation we're talking about is not just data which is getting stored internally within this bank. We're talking about the entire ecosystem. So trusting blindly on that data is something that shouldn't be done, especially in a very in an institution which has other people's money. So yes, automation is important. We should increase all these new technologies, models for credit underwriting. But yes, there should be a human behind this.
Sure. Thanks, Anju. Thanks for your inputs here. I think you rightly mentioned that, yes, there are certain products which have been digitized, but for the ones which have not been able to digitize, or I would say that the humans are, I would say technology is becoming an enabler for them rather than a replacement for them. I will, have the follow-up questions on that layer, and we'll also try to touch base a bit upon the security and the risk aspects involved around this. But I'll quickly move to Vikas from here on. And Vikasji, as you mentioned in your previous remark that you've been, I would say, party to a lot of alternate data, which is being used for assessing risk. How do you think that this is enabling new lending opportunities, and what potentials do you think that this model has in terms of the future for the future of financial institutions when it comes to these lending?
So, Shank, as far as digital lending and alternate data points are concerned, as Anshu, Mr. Sai has rightly pointed out, uh, technology is a enabler. It is not going to replace the human. We discussed in the first round of question you mentioned about the informal customer segment. Though, if you talk about the, I also spoke about the alternate data points which are available in the terms of bank statement, bureau data, spending habits. But still, you need to have a touch and feel factor, wherein you need to feel the assess the customers in person, in physical. Having said that, alternate data points, it has improved the efficiency and the cost of credit delivery has come down. You know, this is where you need to look at it as a technology in the financial ecosystem. Again, Mr. Sai rightly pointed out, everything has a cost, in the system. If you automate, probably you are reducing the cost on the human side. But again, it has a cost on the, we all have seen in the unsecured and other different product segment in terms of credit cost. So it totally depends on the risk appetite of the financial institution and the framework, risk framework, which they have created around this. I think it is evolving. It has evolved especially in last 5 years. For this segment, I am quite positive in next couple of years it will evolve further, and it will really improve the efficiencies in the entire ecosystem in terms of underwriting.
Sure, perfect. I think that sets the context for the next question. So, I will quickly move to Sharatji, in order of the sequence which we are proceeding here. Sharat sir, in terms of, use of alternate data points, we've talked about, your perspective around the structured data points which are available. How do you see, alternate data points being captured and being utilized in these underwriting models? And also, your opinion around formalizing, I would say, benchmarked policies using these alternate data points. Can that be a boon for the informal sector to come up? And sir, just wanted to hear your viewpoints on this aspect. And I'll just like, since we are running in the second phase of the webinar now, I would also like if you can touch base a bit upon the security and the controlled aspects around this. And this can be a common for all the speakers in the next questions. Sir, would just like to hear your thoughts very quickly on this, sir.
Yeah. So we very much uses alternate data for certain kind of products. Like I mentioned, embedded finance, okay, even digital loans, and to some extent we use for our emerging market business, which is a micro lab, up to a, let's say 10 lakh kind of ticket size, right? So we use a lot of alternate data. We use customers profile, their stock data, their whatever receipt they have, okay, whatever business they do it, right, which is not on a paper sometime, okay, and of course other sources data. So we use that, okay. However, to come back with a fixed kind of policies around alternative data, it will take some time. Okay. Yeah, it's too early to say unless until you see the portfolio trend behavior, right? Up to 2 years, 2.5 years, right? Real portfolio flavors comes around 18 months in our case, right? 18 months to 24 months, right? Because our loans are higher ticket size, I would say, especially emerging market business. And of course, for embedded finance, our tenor is 12 to 15 months. There is showing good results. Okay, very good results. It's below our expected norms, whatever we have set ourselves. But coming up with a policy around that, it will take time. Okay, okay, that's my view. And what was the third one? You asked something?
So that is basically around the security and the risk.
Security, yeah. So security is, of course, we have, we use best of the security tools with us. We have a 24/7 security operations center, okay, who keeps monitoring each and every aspect of security, right? We do security audits regularly. There are no adverse remarks on that, okay. And of course, we have everything on AWS, which comes with a lot of security inbuilt, okay. So I don't see any security concern issues as of now.
Sure. And sir, since you mentioned, a bit about the cloud usage, that, have you seen that cloud-based solutions also becoming one of the key aspects of, getting that scalability in terms of their approach versus the on-premise, system?
Definitely. You can, well, I have seen that in last few months on the fly, you can usage cloud, you can increase whatever bandwidth or whatever flexibility you want to introduce, right? And, we had a new system also, and 1,500 users on a day one, okay, coming on the system, and we hardly had any downtime. And we had infrastructure issues. Okay, cloud, when you put every application, it takes time to stabilize, right? But beauty is that we hardly had 2-3 minutes. So we were doing everything on the fly, whatever we wanted to do that. That's only possible via cloud usage, I would say. On-prem model is very difficult.
Right. Sure. Thank you, sir. And I think since you have a hard stop, so, whenever you feel free.
Thank you, everyone. Thank you very much for everyone's time, and nice pleasure talking to everyone.
Thank you.
Thank you.
I'll just forward my question to Manoj sir. Manoj sir, in the second part of our discussion, we've talked a lot about, underwriting, but I just like to, take everyone's attention a bit towards onboarding, because, underwriting is definitely, we have a lot of data points to look at. We've tried to establish, use of data analytics, alternate data points, technical integrations to be streamlined, putting up, more structured policies and marriage between them. This underwrites the customer, but, at the end of the day, the customer has to be onboarded. So Manoj sir, how do you think that, these onboarding solutions have, I would say, evolved in the previous years? And also, sir, because we are looking at a lot of secured lending products, onboarding by default has, a vintage process, which is a legal and a technical, or I would say a pre-sanction visit to be conducted. How do you think that, maybe onboarding journey of the customer can be made more effective in terms of using, if we are using certain AI ML based solutions, or we are using certain, I would say, geotag based solutions? Just, if you can throw some light on these aspects, sir.
This onboarding of customer, that is the, we can say that the very initial part of any digital lending. So while onboarding a customer, we have to ensure that we are onboarding a right customer and we are following a right process to as prescribed by regulatory authorities while onboarding the customers. In particularly in the digital front, actually this onboarding is it is very easy for the retail customers due to this account aggregator, this geotagging. You can check the GST, PAN, or all KYC related things. But definitely it is a challenge to onboard a corporate customer, basically a large corporates, for which I think the banks, though some of the banks has gone ahead with 5 crore proposal, but that is just a initial phase, and onboarding doing onboarding process for a corporate customer, definitely it is a challenge, and I am sure that the industry is discussing on this along with the other fintech bodies and private solution providers based on that. So and in market, various analytical tools for geotagging, for small onboarding, small these kirana shops or small corporate customers, their liveliness checking. So many things have already evolved in the market, and the banks as well as the corporates, they have started using. So I am sure that with whatever the CKYC, EKYC means channels and the plans are coming, I think if everybody must have read today's newspaper, wherein there is a article on that Madam Finance Minister is going to discuss with the CKYC process, because that is becoming a very big challenge in the industry, that every institutions, they are doing a separate CKYC process. So the industry totally means fully focused on this onboarding process, and I am sure that with evolving technologies and with the future days to come and use of good technology as well as the AI models, the onboarding process of corporates will also become a easier things.
Perfect, sir. And sir, just a quick light, if you can throw on the pre-sanction formalities or the legal technical, any thoughts of digitization on
Yeah.
that?
I think that is a big challenge for the institutions doing a PSVR, means pre-sanction verification, means wherein still we can say that still our officials are visiting to the for doing this PSVR, which is a time-taking process. But with this liveliness check and the geo-tagging, I think for the small ticket size loans we can avoid that. And again, I think means most of the banks, they have already started this internal discussion that for some ticket size we should relax that PSVR particular piece. And in security side, I think if you see the secure loans, again particularly for a collateral based loans, wherein this physical collateral is needed, like for a home loan or any MSME loan, if you are not going ahead with CGTMSE, and it is a means hybrid model, wherein we have to put some collateral as well as we have to put some percent of the CGTMSE. There it has become, means I think it is the industry challenge, that since the data is land record data, most in many states it is not available, only 9 and 10 states they are onboarded on the ULI platform, and some of the revenue data are already means in digitization. So that is also a challenge from the security front for the this thing secure loans. As well as I think as a process, while giving any secured loan, we are doing a SARSAI search and SARSAI registration. That is also, I think SARSAI has come up with the inquiry API, which banks have started utilizing. But the doing a SARSAI means making a charge, that has digitally become a challenge. I think on that everybody is working, and everybody has already discussing with the SARSAI to give the API. So these are the basically two challenges, which means for secure loans as well as this doing a PSVR.
Thank you, sir. I think very well articulated on that front. Definitely, there's a lot of scope for technology to be infused further in these layers. Well, Anshu, very quickly moving to you. We have 10 minutes of maybe last 4 to 5 minutes which you can spend upon what's your take in terms of retail, or I would say individual customers. We have discussed a lot on onboarding. Can still be digitized. But when it comes to dual signatory entities, or I would say, multiple partners being involved in a single program, how do you think that, technology can ease the process there? And how do you think that, we can still somehow create, or, I would say, a marriage between the technology solutions which today exist for, let's say, a video KYC, or maybe, a video PD for individual customer. How can that be enabled for basically a dual signatory customers there?
Okay, so Shashank, see, technology is not being used only for an individual customer today.
Right.
I think, and all participants would be aware. So Bandhan Bank, I'll talk about Bandhan Bank. So Bandhan Bank, we started as an NGO, went on to become the largest NBFC, and still we have a majority base of microfinance customers. Now, see, when it comes to lending to whether it is a microfinance customer, an individual for a PL or a housing loan, or whether it is an MSME customer. So, so I'll give you an example of say alternate data, as everyone was talking about, alternate data being used for credit underwriting. So from the majority of customers that we have, when so these guys don't have a credit footprint today, and you don't have data that you can get from any other source. It is primarily an alternate data that you get. Basically, his behavior on a non-financial channel. It could be a social media behavior. It could be a, say, website behavior, etc., etc. So, see, right now, uh, we don't have such kind of a credit model which actually captures this data and gives you an information about a customer who might be a genuine customer, will pay, but you don't have these kind of models. Now, so the point that I'm making is, see, from our bank's perspective, we we have a product called as group loans, in which we lend to a group of ladies who are entrepreneurs. Now, over a period of time, when these ladies graduate and they are they are liable to get an individual loan, we graduate them to an individual loan. So from Bandhan Bank's perspective, we have always been uh, not just depending on the data that we get from these data aggregator platforms, but also on other sources of data. That is what is it about?
Fair enough. I think that that makes a valid point that since you're sitting at a huge amount of legacy data also, which, in turn has helped you to structure some customized products for that particular segment as a whole, that can really add more value there. Well, Lanshu, I'll quickly jump to Vikas for his, I would say, closing remarks, and then I can probably, put up one question to each one of you, and you can feel free to share your thoughts on top of that. Well, because taking your perspective around these dual signatories and corporate customers, since you are also into MSME lending, do you see that, I would say a deeper adoption to the technology, or I would say a word of mouth for the fintechs who are already connected in the webinar also, that some more decisions to be taken around digitization practices to be set up right for this segment of the customers? And do you think that that can be taken up in the shorter run? That's a long-term strategy. What's your view on customer onboarding perspective for the corporate customers?
See, from the corporate perspective, I think again it has to be hybrid. As I mentioned in my previous remark also, you cannot digitize. See, you can digitize, automate the processes, but ultimately here money is involved, right? So there will always be a human interaction. Now, when you talk about the automation, then you will have to, depending on your risk appetite, exposure, ticket size, you'll have to freeze based on your risk appetite. But when your exposure is large, I think human intervention will be there. Again, I'm reiterating that in terms of automation and technology intervention, it is more from the perspective of ease, simplicity, and improving the efficiency. Right now, in terms of technology, we have talked about the onboarding and underwriting only. I see use case. I'm quite positive in terms of monitoring of the portfolio, post disbursement use case in the collection also.
Okay.
Yeah.
Fair enough. So, any thoughts on the collections being, being a use case here? If you can just spend a minute, we'll definitely, like to gather your thoughts around
So,
that.
Sashank, in terms of collection, you have from the bureau data or chatbot, reminder calls, something, these kind of then again you will have to rely on the alternate data points in terms of customer tracing. These tools are available in the market. A lot of tech companies have developed the solutions. So you will have to integrate uh, various alternate data points available developed by the fintechs, and then you will have to create the framework. So I think I strongly believe that when you marry all these alternate data points from various sources, you need to create a framework keeping in mind your customer segment and your risk appetite. But it is going to surely help the entire ecosystem, whether it is on the retail side or the corporate side.
Fair enough. Thank you. Thank you, Vikas, for the inputs. Manoj, sir, very quickly moving on to you, sir. We do have a question for UCO Bank also. I'll put that up. But before that, sir, since, out of the entire panelists, you've been, I would say, also actively working on creating some onboarding and digital solutions for the agri customers, sir. Sir, any thoughts on that, how technology is being taken up? We've discussed about the consumer and the MSME customers. But upon the agri side of the customers, your thoughts around technology adoption, and then possibly I can, route the question also with one of the audience who has posted for you.
Yes. So Sasank, for this means agri customer, I think we have to understand their need first, and we know that the most of the agri customers they are not tech savvy, right? So the solution which we should provide to the agri customer, that should be very efficient, and that should be very low bandwidth use technology. Like I will say that means in our bank we have done this KCC renewal process, wherein not only through OM mode we have also allowed them the SMS mode of KCC renewal. So means along with your OM mode, I think this SMS, or since I think as an audience, many of the fintechs are there, it will be a humble request from my end. If some IVR related or like UPI 123, means if such type of models can be evolved for this agri customers particularly, so that is going to be very helpful for the agri customers, because they are the backbone for our country and our economy. So we have to look at that, how easily they can they can be funded, or they can be means lending can be provided to them. So in the same fashion, I think for agri particularly now, whatever we have started this SSG financing to SSGs on the agri part. Second is this milk pouring data. I think now Amul and many companies, they have already come up. Many fintechs they have, and in ULI also milk pouring data is now it is getting integrated. So if you use this SSG and milk pouring data related to this dairy related fundings, which is very much needed for the end use agri farmers for their day-to-day needs. So means these and account aggregator with this means financial inclusion concept. I think most of the agri rural, even if rural to rural agri customer with BC channel, they are already onboarded. So if account aggregator and this milk pouring data, then this KCC farmer data. So these things, if you can use these technologies, so if you can use, and as I again repeating that this telecom and utility data, if you can utilize. So with a small means low technology used facilities, if we can provide to these agri customers for these agri loans, that will be helpful for the agri as well as the agri industry particularly.
Very right, sir. And sir, in the audience, we've just got a question for UCO Bank here, and I think one of the attendees have posted a question that is there any option offered by UCO Bank in balance transfer of a trade loan?
Balance transfer of a trade loan, actually we are working on that currently. Means it is there, like we have a scheme called Abhinandan for MSME customers, UCO Abhinandan scheme, which is a balance transfer scheme. So for MSMEs, yes, it is there. I think the gentleman who is asking, you can go through our website and you can go through our UCO Abhinandan scheme. Balance transfer, that is for traders for home loan. I think we already have balance transfer scheme. But yes, for any agri product, we are not having any balance transfer scheme. But surely for MSME and for retail customers, it is available.
Certainly, sir. Thank you. Well, I think that brings us to the closing of this webinar today. And I think we've been able to establish a right set of audience and a good deliberation around use of account aggregators, use of GST as an underwriting tool, then alternate data coming into picture, and how exactly marriage of credit policies to fintech products is to be taken up. We also discussed partnerships as a major, I would say, enabler going forward. And in the second half, we were able to discuss a lot on the onboarding fronts being taken up for the dual signatory customers and the corporate side of the customers. And I definitely think that your deliberations were of much, I would say, awareness to all the attendees who were present there with us. And on behalf of ScoreMe Solutions, I would once again like to thank all the panelists and the attendees to spare their valuable time, and connecting with us. And we'll be coming up with more and more, I would say, the industry required topics around our webinar series. And we look forward to stay connected with all of you, sir. Thank you. Thank you so much, everyone, for your time.
Thank you, Shashank.
Thank you.
Everyone.
Thank you,
Thank
Shashank,
you,
and all
everyone.
attendees, all panelists. Thank you very much.
Thank you.
Thank you.
Thank you,
Thanks,
everyone.
Anshu.